Well, today could be the day. It probably won't be. We've been saying that for weeks at this point. We're talking about the debt ceiling. President Biden returns from a busy G7 summit with a meeting with House Speaker Kevin McCarthy top of his to-do list. The speaker says any deal could be voted on in the House this week. This amid another warning from the Treasury Secretary Janet Yellen. She told Meet the Press the chances the government can pay all of its debt by mid-June are, quote, quite low. Joining us for the conversation, Jeannette Lowe, Strategas Securities Managing Director for Policy Research, and also with us for the first half of the show, at least today, Steve Sosnick, Interactive Brokers Chief Strategist, going to be hanging out with us. Jeannette, I do want to start with you because we're getting closer to June 1st, which is that date that the Treasury Secretary has floated. What happens after June 1st if there's no deal? What measures, what things start to not get paid by the government?
Yeah, well, thank you for having me. So just as a reiteration, June 1st is the X date. There is usually a little bit of wiggle room to that date. So the Treasury tries to have a buffer in place so that if we were to cross the X date, that would really put pressure on policymakers to then actually get a deal. Now, there is some talk about whether or not June 1st is the actual X date, or maybe it's going to be a little bit more like June 7th or June 8th. But the risk is that we've seen tax revenues come in weaker in May. And so the risk is that June 1st is more likely the date than even a little bit later. But as Yellen said, if we don't make it to June 15th, we don't get those quarterly tax payments. And that makes it a little bit more difficult to actually have enough cash to pay all of our bills. But the Treasury Secretary also yesterday pretty much insinuated that there would be no real default. So we would continue to make principal and interest payments on treasuries, but then it would be more about a prioritization of other government spending. So we are of the view that the secretary would prioritize things like Social Security and Medicare and defense, but may have to maybe withhold payments to government contractors. And that's where you could see a risk. And I think that's where you've seen some risk in some of the names that are tied to that as well over the past couple of weeks.
Steve, it looked like you had a reaction to that as well.
Yeah, well, that was my point would be, June 15th, I know I've got to pay some estimated taxes, and I think some other people must. And so the question would be, if we make it to June 15th, do we then get a bit more breathing room because of the estimated tax payments?
Jeannette, what do you think?
So we would, if we actually made it to June 15th, we would have a little bit more breathing room. And then the Treasury Secretary would actually have a few more extraordinary measures that would then kick into place on June 30th, which means we could potentially get into July. However, I think all of the negotiators are focused on June 1st. Yellen was out yesterday trying to also continue to put pressure for a deal by June 1st. We do think it's more likely that you're going to see a deal before then rather than not. Biden is back from Japan. That's important. So McCarthy can sit down this afternoon and try to finalize a deal. You do continue to see that while there was a lot of dourness over the weekend and on Friday when the talks were paused, at the same time, you're also seeing that they are getting much more into the weeds. And so this isn't talking totally from the corners. They're really digging into the budget. They're trying to find ways where they can actually fill holes and make sure the spending has some caps into it. But then also trying to protect key programs. So I think that that's important. It's just about really kind of getting into these last details, and we could potentially still see a deal this week at some point.
Are there specific sectors or even industries that you think about, Jeannette, that have some heightened exposure even as these negotiations continue to take place?
Absolutely. So what we've been highlighting is that there's a number of defensive names that kind of what we were looking at even in the 2011 debt ceiling debate. You saw certain defensive names outperform, whereas other names underperformed, leading into those debt ceiling negotiations and then heading out into the rest of the year. At the same time, too, you see things like defense names and other healthcare names that are tied to government spending. They've really been weak. They've actually been weak since January with the speaker's fight over, the vote over the speaker, just because there was that portended that we were going to have a debt ceiling talk over spending cuts. So there is risk there that some of these names are worried that they could see cuts going into the debt ceiling. But then the other thing I think that's important is we're talking about definitely having some sort of spending cuts and caps in this deal. So our view is that they can find a deal, perhaps capping discretionary spending at current year levels into the next year, and then putting small caps on level, how much spending can then grow over the next several years. So that portends that we're going to go into this period of austerity. And the same thing happened in 2011. You had $2 trillion of spending cuts that were attached to that debt ceiling deal. You actually saw the market fall after the deal was announced because the market had to reprice for those spending cuts and for lower economic growth. I think we're looking to see if we could see something similar this time around. Remember, we are obviously, the U.S. economy is slowing as we move into the second half of the year. And so you have lower potential for economic growth, and you have spending cuts on top of that. And you might potentially have a liquidity drain from the Treasury Department and no longer spending down the Treasury General account. So all these things set up for more of a defensive positioning into the second half of the year.
What do you think, Steve? What's going to happen?
Well, it is in many ways what Jeanette's talking about is sort of reverse Keynesian economics, right? You sort of, as you're going into a recession, that's when you want to be expanding your fiscal policy, not necessarily shrinking it. And so you do have this headwind, which, so far the market's relatively ignored, which is if you have fiscal policy going in reverse, and we know we have monetary policy going in reverse, those are some major headwinds. I think it's quite impressive that we've managed to steer forward through them. But that definitely adds to the risk for the second half if there are these spending cuts that do come through.
And you think the market is sort of ignoring that possibility at this point?
I think the bond market is noticing. I think the bond market, if you look at Treasury bills, there's some weird little kinks in the curve around some of the dates that may be in trouble. But the stock market, everybody's talking about it, but nobody's really doing anything about it, with the exception of certain of the specific sectors that Jeanette mentioned.
And go ahead.
So just kind of adding on to that, in some of the specific sectors, do you jive with those same sectors, or would there be other ones that you're keeping an eye on? Well,
I think right now the market's right because if you're an analyst who's focused on those specific sectors that are more dependent upon government payments, this has been on your radar for some time, and this is a clear and present concern. But if you're just sort of chugging along in the NASDAQ 100 winners, you don't really see that. But that's where sort of the broader issues come in about you've already been fighting monetary policy successfully, but now do you want to add a regressive fiscal policy into that picture that you're trading?
And so the question that you asked in a recent piece is the VIX too high or too low? Like, what's the answer to that?
Well, I think I said in that one, if it was a high school debate and I could be assigned to either side, I could give you an answer for either one. If from the people who say it's too high, well, the historical volatility, we haven't had volatility. So traders usually start with their volatility estimates being the historical. We haven't moved in the last 10 days, 30 days, et cetera. So VIX is relatively high for that. If we really think a crisis is coming, VIX is way low because we know that VIX, sort of takes the stairs to the basement and the elevator to the roof. And just the first week in May, we went from 15.5 to 21.5 in like 3 days in VIX. So the risk is to the upside, I think, in VIX.
And Jeanette, just to put a pin in this conversation with you, at this point, how are you gaming it out? Do you think that they're going to get there before June 1st?
We do. We think that they ultimately will get there. There is definitely, you can hear in their statements that no one wants to actually cross over the X date, and a risk of default, even as I kind of mentioned earlier, actually wouldn't be a real default. So there is definitely an effort to get a deal done. I think having, the people in the room, the teams in the room now getting down to the wire is going to be the key to actually finally figuring out what are the last key pieces that need to fall into this. But we are anticipating that there will be some spending caps over a couple of years, discretionary spending caps. We anticipate that there will be some rescission of COVID funding. We anticipate that there will be energy permitting reform. There will be work requirements probably put into the TANF program, and then potentially one or two other items as they're trying to fill this hole and to figure out a final deal. But I think, again, as I said earlier, the fact that they are actually talking quite in the weeds about this seems to portend that we could get a deal. And even though obviously it would have been better to have a deal yesterday, that doesn't mean that Congress still can't get it across the finish line very quickly. And I think everyone will ultimately try to avoid any more talk about default.
Jeannette Lowe and Steve Sosnick, both of you, please stay with us for a hot second here.